Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of the FBAR reporting and Form 8938 reporting for your foreign life insurance policy. It's a very common misconception that foreign life insurance policies are not considered accounts or assets for FBAR and FATCA purposes, but that would be incorrect. Foreign life insurance policies are very common overseas. Many of our clients have them, whether it's a A1A or AIA in Singapore, India LIC at Prudential, UK Friends of Viva policies, Hong Kong AXA. There's lots of different policies overseas, and in the typical situation, a parent will apply for a policy either for their child beneficiary on behalf of the life expectancy of their child, and it generally grows tax-free. In several countries, even when it pays out, it's tax-free. In the U.S., these need to be reported. Let's start with the FBAR. The FBAR is the Foreign Bank Account Reporting Form, aka Foreign Bank and Financial Account Reporting, otherwise known as FinCEN Form 114. FinCEN refers to Financial Crimes Enforcement Network, generally has nothing to do with anything criminal related. You report the FBAR each year that you meet the minimum threshold annual aggregate total of your total foreign accounts and financial accounts. And generally that's going to be in any year that it exceeds $10,000. It's not the payout value of the life insurance policy because that hasn't happened yet. Instead, it's generally the surrender value or the cash value. And if you're unable to get that information, you try to manipulate it with the NAV value to get the best current maximum policy value you can get. An important practice point is it's not $10,000 per asset, it's $10,000 in annual aggregate total of all of your foreign accounts and assets. The FBAR time to file changed after 2016. It used to be June 30th. If you see that date, it is incorrect. It is now at the time your tax return is due to be filed. If you file by April, it's due by then. If you file for an extension, you get till October. As of now, you don't have to file a separate form in order to apply for an extension on your FBAR. It goes automatically with your tax return. That could change over time. Other forms like a Form 3520A as an Apple requires the filing of Form 7004. Another reporting requirement is FATCA, Foreign Account Tax Compliance Act. For individuals, it generally means Form 8938. And for the purposes of this discussion, we're just basing it on individuals, but trusts and estates and entities in the U.S. may also have to file. Form 8938 is referred to as FATCA reporting for individuals. Unlike the FBAR that has a single threshold, the thresholds for Form 8938 are different, and they'll vary based on the marriage status and the residence of the taxpayer. Are they domestic or are they foreign? For example, a single person residing in the United States would file the Form 8938 in any year that the annual aggregate total exceeds $50,000 on the last day of the year. If it's under $50,000 on the last day of the year, but more than $75,000 on any other day of the year, it still needs to be filed. Likewise, if that same person was married and living overseas, the $50,000, $75,000 thresholds shoot up to $400,000, $600,000. Now, one important distinction between these two forms is the FBAR has to be filed even if a tax return is not filed. So if it's a U.S. person and they're below the threshold, maybe the amount of money, the income they have coming in, they go on the IRS website, they punch in the numbers, IRS says you're below the threshold for filing a tax return. Well, that doesn't eliminate the requirement to have to file an FBAR. So that person would still have to file an FBAR if they meet the FBAR threshold reporting, even if they don't have to file the tax return. Conversely, for the 8938, it's only required when the tax return is filed. So if a person does not have to file a tax return, they don't have to file the Form 8938 just to file. When a person is out of compliance for prior years, there's various amnesty programs they can use to get back into compliance. There's a traditional voluntary disclosure program, which is generally reserved for individuals who either are willful or cannot certify under penalty of perjury that they're non-willful. Alternatively, there's the streamlined domestic offshore procedures, streamlined foreign offshore procedures, delinquency procedures, reasonable cause. We have separate presentations for each one of these different types of programs to help walk you through the basic steps. If you want more information about FBAR and Form 8938 for foreign life insurance policies and taxation and things of that nature, please feel free to visit our International Tax Law Library at goldinglawyers.com. We have a sister website, IRSStreamlineProcedures.com, for issues involving the Streamline program. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.